Yeah. So what does this mean for energy?
Our
Sorry,
view
it's
of
not a laughing matter, but
no. I mean, I think there's always the question of what does this mean for markets, and that's the business we're in. Um, I think if you look across the primary energy complex today, you will see that it is either oversupplied or well supplied. And one of the primary energy inputs is trading at substantially elevated prices, correcting for energy content compared to the others, and that is oil. So natural gas and coal are trading at well supplied to oversupplied type price levels, whereas oil is still trading in the mid 80s, low 90s for Brent as recently as a couple of days ago. Our view is in the absence of these two wars, which is what they are, there are two wars, one in the heartbed of a major energy ecosystem in the Middle East, and the other tangling with one of the most important energy net exporters in the world and a nuclear superpower. If it weren't for those two wars, I think oil would be trading for sub $50. We arrive at that price by inspecting the landed LNG costs in Europe and multiplying by some factor of like 5.6 basically, which corrects for energy content, and at roughly $10 a million BTU landed LNG in Europe, that's roughly a $55 to $60 oil price. And since oil is the easy to use, so in that range, I think there's a geopolitical risk premium embedded in the price of oil that, comparing it to the energy corrected landed cost of LNG, gives you some insight into, and whether that's expanding or contracting gives you a rough read on where the markets are heading. And so, like what we saw just overnight, for example, when it looked like Israel had made a serious counterstrike against Iran for Iran's largely symbolic strike against Israel. Oil spiked, right? And then as it became clear that perhaps this might be the end, then we saw oil, drop several percent from the overnight highs. And so the jaws of arbitrage between natural gas, which is less impacted by what's going on in the Middle East, at least by the market's current view, those jaws sort of tighten up a little bit today during the day as prices normalized and oil came back in, and some of that risk premium has been taken out. These types of sort of market indicators for geopolitical events are very temporary, by the way. I mean, I think the market has decided, for example, one of the most interesting observations in the market is gold is reacting as a risk off flight to safety, whereas Bitcoin hasn't been. So when gold spikes into these headlines, we've seen Bitcoin collapse into these headlines, which is a fascinating observation for which I don't have much in the way of an explanation for, but it's just interesting to observe. We enjoy observing market reactions to these types of headlines, and for a while they can be pretty instructive as to how the market is pricing the risk aspects of certain geopolitical events. So what we've observed is oil higher, gold higher, Bitcoin lower, if it looks like World War III is imminent. And when headlines cross the screen that indicate that World War III perhaps has been postponed, then we see the reverse price action.